You lodge your tax return in October, the same way you have done every year for a decade. You have private health cover, or you thought you did. Your taxable income is under the threshold, or you thought it was. And a few weeks later, there is a line on your notice of assessment for $1,170 that you did not know existed, attached to a system you have been paying into every fortnight of your entire working life, without ever reading the fine print on how it charges you. Medicare is not one charge, it is two, and the second one is not really a tax at all. It is a price, deliberately set at a level designed to make buying something else the cheaper option. Once you see that, the whole thing stops being confusing. There are 4 levels of income in this country, and at each one, Medicare charges you differently, defines your income differently, and offers you a completely different deal. Most people only ever meet one of them, and most never find out the other 3 exist until they cross a line they did not know was being measured. So let us go through all 4, with the figures that took effect on the 1st of July. Level 1. You earn $32,000. Your name is Priya. You are 24, you work part-time at a veterinary clinic in Cairns while you finish studying, and you have never once thought about Medicare as something that costs you money. You pay nothing, not a reduced rate, nothing. Most Australians believe the Medicare levy is a flat 2% on everyone, and it is not. Below the threshold, which sits at around $34,000 for a single person, the levy is nil, not discounted, 0. Above it, there is a phase-in band where it rises at 10 cents in the dollar until the full 2% applies. So the levy has a floor, a ramp, and then a flat rate, exactly like income tax has brackets. It has a floor, a ramp, and then a flat rate, in exactly the same shape as income tax brackets. Nobody ever describes it that way, which is why almost nobody knows it works like that. At level 1, Medicare is genuinely free at the point of use, and free at the point of payment. It is the only level of the 4 where both of those things are true at the same time, and it is the level almost nobody stays at for long. Level 2. You earn $70,000. Your name is Dean. 32, a diesel fitter in Wollongong. No private health cover, no intention of getting any, and a fairly firm view that the whole thing is a rort. Dean pays the full 2% Medicare levy. $1,400 a year, taken through his pay, and he barely notices it, because it comes out before the money reaches him and has never once been a separate decision he had to make. And nothing else happens. No surcharge, no penalty, no letter. The surcharge only starts above a threshold. Dean is nowhere near, which means he can go his entire working life without private cover and it will never cost him a single dollar more than it costs anybody else at his income. This is the level where the system works the way people think it works. One levy, one rate, one bill, and the decision about private insurance is a genuine free choice, with no financial penalty attached to either answer. Remember that, because it stops being true $15,000 from here. Level 3. This is the level where almost everybody who gets caught. And the reason is that it is not really about how much you earn at all. It is about how the tax office decides to count it. Your name is Tom. Your taxable income is $90,000. The Medicare levy surcharge threshold for a single person in this financial year is $105,000. You are $15,000 underneath it, which feels like a comfortable margin by any normal reading. You do not have hospital cover, and you have never worried about it, because 90 is comfortably below 105. And then you complete the income test section of your return, and you declare $27,000 in reportable fringe benefits because your employer's salary packages your car. That is a completely ordinary arrangement that hundreds of thousands of Australians have, and it was set up specifically to reduce your tax. Here is the thing nobody tells you. It is calculated on something the tax office calls income for Medicare levy surcharge purposes, and that is a genuinely different number that appears nowhere on your payslip and nowhere in your employment contract. It includes your taxable income, plus reportable fringe benefits, plus reportable super contributions, plus certain net investment losses. Add all of that together, and Tom's income for surcharge purposes comes to $117,000. $12,000 over the line, he was $15,000 under. Tier 1, 1%, $1,170. That is not a hypothetical I built to make a point. It is the Australian Taxation Office's own worked example for this financial year, published on its own website, using those exact figures. Nothing about Tom's salary changed. He did not get a pay rise, he did not change jobs, and his bank balance is identical to what it would have been. The car he salary packaged specifically to save money is the single reason he crossed a threshold that is measured differently to every other threshold on the same return. Level 4. You earn $200,000. Your name is Rachel. 49, runs a physiotherapy practice in Newcastle, and every year she looks at the premiums, decides they are not worth it for someone who is healthy and rarely sees a doctor and goes without. The surcharge has 3 tiers, and they moved on the 1st of July. Tier 1 starts at $105,000 for a single and charges 1%. Tier 2 starts at $123,000 and charges 1.25%. Tier 3 starts at $164,000 and charges 1.5%. For families, every one of those numbers doubles, plus $1,500 for each dependent child after the first. Rachel is Tier 3. 1.5% of $200,000 is $3,000 a year, on top of the $4,000 she already pays in the standard levy. And here is the part that reframes the entire video, because it explains what the surcharge actually is. $3,000 a year is roughly double what a basic hospital policy costs. So Rachel is paying roughly double every year for the privilege of having no insurance at all. She gets nothing for it. There is no policy, no cover, no benefit of any kind attached to that $3,000. That is not an accident or an unintended consequence. The surcharge is deliberately priced so that at almost every income above the threshold, buying the policy is cheaper than not buying it. It is not a tax designed to raise revenue. It is a price designed to be avoided, and people avoiding it is the entire policy objective. The revenue it collects is a sign the policy is not working, not a sign that it is. Which means the correct question at level 3 and 4 is not whether you want private health insurance. It is whether you would rather pay a smaller amount for a policy or a larger amount for nothing at all. Framed that way, the arithmetic answers itself for most people above the threshold. But before anyone rushes off to buy the cheapest thing they can find, 3 conditions that catch people out. The policy has to be hospital cover. Extras-only policies, the ones that cover dental and physio, do not exempt you from a single dollar of the surcharge. The excess has to be low enough, $750 or less for a single, $1,500 or less for a couple or family. A cheap, high excess policy is the worst possible outcome because it can leave you paying premiums and the full surcharge at the same time for a policy that exempts you from neither, and it has to be held for the entire income year. Cover taken out in March does not exempt you for the period from July to February. You are charged for the days you were uninsured, pro rata, which means a policy bought in a panic in May achieves almost nothing for that year. So that is Medicare at every level. At $32,000, it costs you nothing. At $70,000, it is a simple 2% and a genuine choice. At $90,000, it can catch you through a definition of income you have never been shown. And at $200,000, it charges you double the price of the thing it wants you to buy. The number to actually check is not your salary. It is your income for surcharge purposes, because that is the only figure the surcharge is measured against, and it is the one that does not appear anywhere on your payslip. Tell me in the comments whether you knew those were 2 different numbers before today.